And so we still very much are all about creating raving fans every single transaction. We want them, the tagline at Sun American is every house that's purchased is potentially changing somebody's life, and so what we profess to our loan officers, to our processors, to our underwriters, like it's not just a file, every single transaction that we do has a family that's potentially got, a moving van that's on its way to the house, or I do a lot of reverse mortgages, and so in financial planning, like I'm constantly envisioning the people and the decisions that they're having to make, whether it's, hey, I need to get some money out to help my grandkids, or we just need to make ends meet, or this is actually going to, fit perfectly with our tax planning strategies. So in 5 years from now, I hope that doesn't change. In 5 to 10 years from now we're cognizant of the fact that AI is changing things, and so we've got AI tools that we're implementing on the marketing side and on the mortgage side. But the goal remains the same, is that we're super fortunate to be where we are, to live where we live. And so we're going to keep helping people purchase property or refinance property, or help with their financial plan through, refinancing with a reverse mortgage line of credit or things like that. So.
Parker, thanks for coming over, man.
Yeah, happy to be here.
Glad you could be on the show.
Thank you for having me.
I'm particularly excited to have you on because you are third generation of this business. Is that correct?
Yeah.
Tell everybody about your business, your family's business, and basically how you guys got here.
Sure. Yeah. So my grandfather's name was Ross Farnsworth. Here in Maricopa County, late 1950s, he got an idea to develop a master plan community. At the time, it was like Del Webb on the west side was doing 55 plus communities, kind of retirement communities, and he decided to do his first with his father out here near the Superstition Mountains. And that idea of developing real estate kind of blossomed into, I think he probably had 9 or 10 companies going through all the way through like the early 2000s.
Wow.
So there was
9 or 10 different companies?
Yeah, there was the development company, construction company. There were, Farnsworth wholesale plumbing company. There was R&K building supplies. So they all kind of naturally, interlocked, and they were able to refer business back and forth. An insurance company. So in 1984, they started a mortgage company with the idea that the mortgage company would be there to. It actually originally got started just as there was a tax break for developers that own their own mortgage companies that started in 1984, and then the government took it away in 86. And so in 86, my dad had started the company with my grandfather in 1984. Sun American Mortgage is the name of the company. And with the idea that they would just be doing loans for people that were buying houses out in the Farnsworth developments.
Nice.
Yeah, and over time it just became a lot more than that. But for several decades, they kept building houses, and we would be the preferred lender for kind of our sister company. So that's how it started. I grew up around it. My dad was the president of the company, ran the company since its inception. I had uncles that were involved with it, but 2005, 6, 7, I was going to college. I got a degree in accounting. And 2007 hit, and it was a bad time from 2008 on in mortgage. And so my dad came to me. I always wanted to work in the family business, but he said, hey, it's a rough time. He just had to shutter a wholesale division and let go of a bunch of people. And so I went and got a master's degree. I went and went into public accounting, and I got a CPA, worked for Pricewaterhouse Cooper's, big accounting firm here in Phoenix. And shortly after, I was intending on doing that for 4 or 5 years at least, but my dad got called to serve a mission for our church, and he left, and so he brought me over. And so I kind of joined the company in the thick of a downturn, and been there ever since 2009.
Wow.
Running Sun American.
That's amazing.
Yeah.
That's incredible, man. There's a lot to unpack in that. In terms of coming into the mortgage business from 2009 to today, where are you guys at in terms of like loan revenue that you guys will do at Sun America?
Yeah, good question. Last year we closed roughly $300 million in loans. This year we're on track to surpass that. The mortgage industry is a roller coaster, and I knew that getting into it. I mean, there have been times, I think at the height, we probably had over 110 employees. Probably two different times within the 40 years we had that, but
where are you today
down.
In terms of employees?
Today, probably around 65 employees.
It's a big company, though.
Yeah, still a family-run company. We lend in all of the Southwest. Actually, just added Idaho just a month ago. So there's 8 states now with Idaho that we lend in. Mostly, Arizona, Utah, Nevada, California, New Mexico, Texas. Wow. Now Idaho and Colorado. So that's the bread and butter. We do home loans. We've done home loans kind of specifically for real estate brokerages and regional builders as our referral partners.
What makes you guys competitive? Like, where do you guys shine in terms of the lending space? Like, when do you win in a situation if you're up against other lenders?
Yeah, good question. For the most part, we feel like we win in the way that we support the referral partners. We do process, underwrite, fund the loans ourselves. So that gives us a leg up. We don't broker the loans. So most of the referral partners want to know that, if an exception needs to be made, or, that the underwriter, who's underwriting the loan, where's the money going to come from? It comes from us. We make the exceptions. We process, underwrite, fund the loan. So that's always been one of the key, strategies was to make sure that we did everything, even service the loans after the fact. Like, we can sell directly to Fannie and Freddie and service the loans so people make payments to Sun American over time. But I'd say probably 8 years ago, we kind of reinvented ourselves a little bit when we started our own marketing company and developed proprietary software that even to this day, a lot of the builders that refer business to us, a lot of the real estate agents, and now, to be honest, it's kind of blossomed into its own thing just because the software was so good. But that's where we started, was just trying to add value to the referral partners through marketing. And so we have a whole team, an entire company that's devoted to the software itself is kind of where it all funnels into, but it really does do a lot. It's like a CRM on steroids. It's pretty much a business management solution. It can do everything from we have attorneys that use it. We have a lot of home service companies that use it. But it originally started with Sun American as the incubator, where our loan officers, our company, utilized it, and we just honed it and reiterated it multiple times until we felt like it was good enough to take to our referral partners. And so we probably have 20 to 25 regional builders that exclusively use that software to both help them bring leads in and work those leads through their pipelines. And then a lot of real estate agents that use it too. So I feel like we stand out from a lending standpoint. We're super competitive with rate and fees to begin with, but then on top of that, our entire workflow and process is built to just create raving fans. Like, that's the goal.
Awesome.
Yeah, we want our clients to come and tell everybody that they had an unbelievable experience.
We talk about that same thing here. I don't know where that came from, raving fans, but we talked about that in a meeting.
There's actually a book.
What book is that?
I think it's Creating Raving Fans. No,
Creating Raving Fans.
Yeah, there's one that's called, in the title, Raving Fans.
Yeah, I think you're right. Anyway, that's so cool. I think that's why we're in alignment and why, I think we work well together. So is it the same type of company as it was when your grandfather had? Like, how many companies are under Sun America now? Is it just you guys in the marketing company, or is there more?
Well, Sun American. So, my dad was very heavily involved until.
What's the ownership split now?
Now, so just at the start of the year, last year, my dad was still the majority owner. And then at the start of this year, I was made president, and there was some transfer of ownership between me. I do have a brother-in-law that's a CFO. We have a partner that's up in southern Utah that actually bought in about 2018. and he owns a good chunk of it. And then there was still my dad's original partner that was the very first loan officer at Sun American in 1984. His name's Rex Duffin, and he's still with us. So there's
shout out to Rex.
Yeah, shout out Rex. There are five people that own Sun American now, and Sun American's its own entity. Rise Marketing is its own entity. I have two partners that are with us at Rise. One of the others is an owner at Sun American. We have started an insurance company because it kind of just dovetailed perfectly. So we have an insurance company where a lot of the loan officers that do business with Sun American are actually partners in a separate insurance company. And we do property and casualty, home, auto, umbrella stuff with that too.
Your family's pretty entrepreneurial. You guys have this, big mortgage company, and then you have all these other companies that can, work with the company.
Yeah, I mean,
is the 60 employees, is that under Sun American, or is that 60 under Sun American plus all those other companies?
That's just Sun American.
Oh, that's just Sun
not
American.
Counting the other.
Oh, wow.
Yeah, the other one. To be honest, the marketing company, it probably has 4 or 5.
It's a cool company though.
Yeah.
I had a really good call with them on Friday.
Oh, you did?
Yeah.
Oh, awesome.
Yeah.
Yeah, Jeff. Shout out to Jeff. He's the partner there, and he really knows what he's doing.
Yeah, he does. He's really cool.
Yeah, awesome.
So, yeah, we like you guys, man. You guys are doing some cool stuff in the community. And in fact, I actually had met Rex just through, like, the way we met, through just the community. Mm-hmm. Different people you're working with, and they end up saying, hey, can you talk to this guy? And I think that's how I met Rex, through a partner that we were working with, and great guy.
Yeah.
Yeah. I thought that back then, and then come to find out he's, you guys.
Yeah, I grew up 3 houses down from him, so
that's cool.
Yeah, been friends with the Duffins our whole lives.
Nice.
So, yeah,
so what's the mission at Sun American now? Like, where do you guys see yourself in 5 years as a company? Like, where's the vision of where you guys going?
It's a great question. I mean, I think it's an interesting question because I think it is something that both my grandpa and my dad have kind of instilled in me. We still very much believe in the American dream. There's just not very many places. I've been fortunate to live outside the United States. My dad's lived outside the United States, and we've seen how secondary markets here in the United States have made available the idea of buying property and buying houses. And, that's not something that we take lightly. The idea that somebody can come and purchase property because of the secondary markets that have been created. And so we still very much are all about creating raving fans every single transaction. We want them, the tagline at Sun American is we want their, every house that's purchased is potentially changing somebody's life, and so what we profess to our loan officers, to our processors, to our underwriters, like, it's not just a file. Every single transaction that we do has a family that's potentially got, a moving van that's on its way to the house, or, I do a lot of reverse mortgages. And so in financial planning, like, I'm constantly envisioning the people and the decisions that they're having to make, whether it's, hey, I need to get some money out to help my grandkids, or we just need to make ends meet, or this is actually going to, fit perfectly with our tax planning strategies. So in 5 years from now, I hope that doesn't change. In 5 to 10 years from now we're cognizant of the fact that AI is changing things, and so we've got AI tools that we're implementing on the marketing side and on the mortgage side. But the goal remains the same, is that we're super fortunate to be where we are, to live where we live. And so we're going to keep helping people purchase property or refinance property, or help with their financial plan through, refinancing with a reverse mortgage line of credit or things like that. So
how do you see the mortgage business changing in the next 5 years with AI?
I see right now to me, it's a little bit of a toss-up as to where AI affects the mortgage process the best. And so we're working on all ends of it. Inevitably, it should, if everything goes the right way, it should reduce the cost to create a loan. You would think, we should be able to do, with the AI tools that we're working with, we should be able to do more loans with the same amount of people, going forward. And so because there's so much that happens behind the scenes with processing, underwriting, closing, post-closing. There's all these different divisions within a mortgage company, and there are a lot of people that touch that file as it goes through it. Mm-hmm. And we see AI, cutting down a lot of the monotonous stuff. And so the goal to us will be, do you use AI on the sales side? Potentially, it could do what a lot of loan officers do, but right now I just see the need for relationships far surpassing the need for the clerical stuff behind the scenes. So I think AI will affect the back office, at least at Sun American, before it affects the sales side. That's the guess.
Interesting.
Yeah.
Yeah, I could see that being the case. Especially because you guys have those two different divisions, and you got different ways it can impact, you and the consumer. It's interesting. Okay, so you brought up reverse mortgages. There's a lot of people that hear that and get triggered, mm-hmm. and they don't like reverse mortgages. We've had lengthy conversations about them. What are your thoughts? Like, when you're 62, what kind of mortgage are you going to have?
Yeah, I mean, I've been selling reverse mortgages since I was in college. Like, literally 2006, my dad would send me leads. And it is, to this day, I would have thought that by now, if you think about it, 2005 to 2012, that's 21 years, essentially, I'd have thought that we would have clarified a lot of the myths and mistakes. And I've gone on multiple podcasts, and I've been on, literally news channels, and the entire industry, to be truthful, has tried. And it's pretty incredible how misunderstood it still is. The way that we utilize the home equity conversion mortgage and a lot of the proprietary reverse mortgages that exist is kind of just like a big line of credit. And people don't get triggered when you talk about a line of credit. People will go to one of the big banks on the corner, or a federal credit union, and pull out $100,000 line of credit, no problem.
Right.
And they'll take money out, and then that's going to create a payment that they have to make. And the beauty of the reverse mortgage is just that you can make a payment if you want to. Mm-hmm. You just don't have to. Yeah. And so once people hit 62, like, this idea of having this extra bucket of tax-free cash within their home that they can draw from if they need to, I don't see a downside to it. Now, the downside a lot of people will talk about are the upfront closing costs to get one structured. And mm-hmm. To me, that's what creates the flexibility. And that's also the insurance. I mean, I saw it firsthand when I was getting into it in 2007, 8, 9, 10. People that had done reverse mortgages with me or my dad prior to that, they had lines of credit. And even though their house value fell, that line of credit was still available to them and saved them in the downturn. People that had normal home equity lines of credit, as soon as house values fell, the banks shut them off. They froze them. Right. And so I've seen the benefits of the upfront closing costs. The fact that it is insured, that I can't decide, hey, I'm going to turn this line of credit off. Not only that, but what people don't understand is that the lines of credit grow over time. Mm-hmm. And so when you ask me, like, what mortgage will I have? I hope that I've paid my house off by the time I'm 62. But sure. If I have, I will open up a reverse mortgage line of credit with the idea that if I don't need it now, I won't use it. But if I need it 5 years from now, 10 years from now, 20 years from now, regardless of what the house value is, regardless of what the economy is doing, I'm going to be able to pull that cash out. It's not going to be taxable at that time, and I don't have to make payments on it. And so to me, it's just this ultimate flexibility tool. That's all it is.
That's super solid. I think of it, I want to get your thoughts on this. So we spend a lot of time taking our clients through a process where we help them to become intentional with their money and help them to still spend from a place of abundance in retirement. Like, when you go to retire, it can be scary because all the money you were making now stops. You have what you have, and you have to live on that. And that can put people in a very scarce mindset, mm-hmm. right? And so we have a process where we help them create lifetime income. We help them secure that income by removing all the key risks and help them to continue to build wealth even in retirement. And so we talk a lot about HECMs and those types of tools because the reality is, depending on what your definition of wealth is, those types of tools can help you to become wealthy. For example, like if you prioritize your relationships, your experiences, things that you can pull through into your life and actually use and do with the people you care about now, over leaving them some arbitrary amount of money through a transaction and a home sale one day, then, you're obviously acting more in a wealthy way if you pull that money through into your lifestyle use now than just leaving it unintentionally for one day, right?
Yeah.
You see what I mean? Like you have like all this wealth you've accumulated. Some of it you can use, some of it you're going to just pass on like a life insurance policy. And I've been encouraging people, I'm like, what if you could reach into that bucket and pull some through today and spend it with the people that you love? And like what experiences would that open up that currently are not open because of the way you have your estate plan set up, essentially?
Yeah.
You see what I mean? Like it's all your money, right? It's just when are you going to use it
Mm-hmm.
is effectively what I'm getting at. And so it's like, that's just a conversation I've been having a lot lately, and people have been rethinking. They've been going, oh yeah, why do I need to leave $800,000 to our two kids when we're in our 90s and they're in their late 60s? What does that do? Why not,
Yeah.
do 10 amazing trips with them for the next 10 years, or something like that.
Yeah. I've seen so many different, I've done thousands of reverse mortgages. And
Yeah.
so I've seen people that were desperate and destitute that just needed the money to get by.
Mm-hmm.
I've done these for multi-millionaires, like tens of millions of dollars in the bank, but they're setting up the line of credit so that they can draft money here instead of utilizing, other monies that'll be taxed.
Oh, for sure.
There's a lot of different reasons to do it, but honestly, some of my favorite reasons are usually those situations where people look at it and say, look, I can help people with it now. Like I can go and I could spend $10,000 a year to pay for my grandkids, college.
Yeah.
And then they may or may not pay me back, but if they don't, it's not going to create a burden on me because I don't have to make payments on it.
Right.
So
I'm not trying to make a plug, but that's like exactly what I talk about in my book, Buy Back Your Life. Like that's buying back your life, is taking money that you were unintentionally using and then repurchasing life experience with it.
I
while
love
you can. And that's the whole purpose to me of a good reverse, is like, it's a lot of people think it's just for that person that's running out of money.
Yeah.
And it's not. Like the more I feel like people understand it, the wealthier people are flocking towards it, because it just makes sense. Like, why would you not?
Yeah.
If you could control that capital for that cost, and it's a tax-free transaction, and you don't have any recourse on it, that's a phenomenal, like, there's so many opportunities for that.
People always ask me, like, would you do this? Would you do this? And I like, they laugh when I say, I've done it for my grandparents.
Oh,
I just did it for, so Rex, who sells it, he just did one.
Yeah.
Like on his own home.
Everyone that I know that's in that business does one for themselves and their family.
Yeah. Yeah, and in Rex's situation, he wouldn't mind me even talking about it because we plan on talking about it.
Yeah. We got the exclusive on Rex before. Dang.
Well, I'm just saying, like, we literally want to market the fact. Like, people are always, I'm always leery of either financial planners or people that are peddling products, and I just want to know, like, would you do this for yourself? If I find somebody that's intelligent, that I really feel knows what they're talking about, the next question is, okay, well, what are you doing for yourself? How are you creating wealth? How are you growing business? How are you that's what I want to know. And so, like, I want to know, would I do it? Yes. Would Rex do it? Yes. And he doesn't need it. Like, he has zero need for the money, but leaving that money in the line of credit where you can have $300,000, $400,000, $500,000 that will double every 10 years, because the government through this program is going to guarantee that you get access to more money, regardless of what the economy is doing, regardless of what the house value is doing.
And why is that? Just so people understand.
The reason why, truthfully, is that they are betting on you getting older. That's a pretty safe bet, because the entire program is just based on how old you are. The older you get, the more of your home's equity they'll let you borrow or utilize. Mm. So somebody who's 62 may only get like a line of credit that's 30 to 40% of the house value. Somebody that's 90, might get closer to 70% of the house value. And it's dependent on the interest rate too. The lower the interest rates, the more money you get access to. Mm. But if you don't need the money now and you leave it in the line of credit, whether you're 62 or 90, they grow that at a guaranteed rate because they're betting on home values going up, and because they know you're getting older. Yeah. And so, and because they've got this insurance that's basically, they've socked away right from the beginning, because they took a huge bath in this program's been around since 1989, and there's been a couple dips, but between 2008 and 2014, they lost a lot of money.
Yeah.
And so what they did was they just pared back how much money they give out, and they, going forward, they're just watching it. And they may make changes, as things go well or go poorly, they'll constantly tweak how much money you get access to. But that's the biggest misunderstood piece. The first misunderstood piece is that you don't own your home. That's never been the case. You always own the house. You're always on title. You're always on deed. You're free to sell the home whenever you want. There's no prepayment penalties, and that's been true since 1989. So that's the frustrating part, is we still have that myth. The rest of it is kind of hard to understand. The fact that they would grow this line of credit, that is hard to understand. And I get why people, may misconstrue that or misunderstand that. But that's why we want as many people as we can to come talk to us about it.
But values appreciate and people get closer to their mortality. So, that's why it grows.
Yeah, they're just going to continue to unlock more of the home's equity over time. I try and explain it to people. Nobody's paying you interest. First of all, that money's not yours. It's in a line of credit, and it's only yours when you take it. And it's still borrowed. Like, people got to understand that. It's not free. It's going to accrue interest, once you take it. But as the money sits on the line of credit, it's still a real asset that's guaranteed to you. It's money that's increasing tax-free that you get to spend as long as you live in that house, no matter what. And so the beauty of it is that house values could fall, interest rates could skyrocket. We could go through the second Great Depression, and I still have to give these people that money from the line of credit.
Right.
So it's just security and flexibility that it creates.
When you ask that question, like, would you do this for yourself? It's like, when I think about what our industries offer together, like all the people we work with and everything, it's like guaranteed cash flow, more than you need to live on, appreciating assets with real estate and stocks you'll never sell, no mortgage debt, tax-free access to the utilization of money. Like, yes, of course I want all those things. Like, why would I not want, plenty of life insurance for my kids, plenty of, ways to mitigate other risks that come up and still have building wealth. Like, I feel like people that pay off their mortgage, whether they pay it off free and clear or they arrive at a reverse solution, I feel like their wealth, if they're not in a place where they're destitute, right, and it's like their last ditch effort, but I feel like if they're a person who's just kind of going along in retirement and then they get rid of that obligation, I feel like their wealth increases. I feel like I've seen that happen many, many, many times.
Yeah.
Once they get the mortgage taken care of. It's like a weird thing that happens, like, psychologically. They just become wealthier, and they save, and they...
Yeah, and I feel like I've seen that even with people that use reverse mortgages, because I think in a lot of cases...
No, that's what I'm saying. Like, they...
Yeah, a lot of cases, they just, like... the reason why the whole program, honestly, the reason why it started was the AARP did a study from 1970 to 1980, and it was a comprehensive study that tried to study people, what happened once they reached their 70th birthday, and the idea was to follow them. And the people that had to use their home, had to sell their home because they were needing the cash to get out of it to continue to live, their life expectancy fell in half.
Whoa.
And so the idea became like, let's figure out a way to help people age in place, because they know their neighbors, they know where to get to the bank, they know where the grocery store is. By the time they're 70, they're more comfortable, less stressed, if they know that they're not living, paycheck to paycheck, if you have a little bit of money, a little bit of savings. And so they created the reverse mortgage with that idea of like, how
age in place.
Yeah. How can we figure out a way to help people stay in the house? Most of the people that sell after 70, it's not because they want to. Some downsize, they want lower taxes, lower insurance, lower maintenance. You'll have those people, but a lot of times people are leaving that house and selling it to go rent because they've got $100 or $150 or $500,000 tied up in the house. There's no way to get it and stay in the home. And so the beauty of the program is it lets people who, for the most part, want to stay in the home, it lets people stay in their home. They can have access to the equity. They don't make payments on it. Yeah.
So the whole point of the podcast is like brick by brick, like one person, one story, one entrepreneur, one opportunity at a time, right? And so obviously in reverse mortgages, I'm sure you've had a lot of opportunities to serve people and create some life-changing opportunities. What's your probably favorite opportunity you got to be a part of when serving somebody in the reverse mortgage space over your
That's a really good question, because like I said, I get everybody from, I think some of my favorite times are when I see like a husband and a wife that have saved and tried really hard their entire lives, But then I look and see that, you know, one spouse really just wants to make sure that the other spouse is taken care of. I've seen people come in with money to make it work, you know, and for those people, it's always interesting to me because you just kind of see the love that they have for who, you know, most of these people have been married for 30, 40, 50 years.
Right.
And their last thing in their mind is like, hey, I still have a $300,000, $400,000, $500,000 mortgage, and she's going to have to pay this, or he's going to have to pay this. Even if I pass away and if my pension goes or if my Social Security goes, there's going to be more strain on them. So I've recently done a couple where, you know, they had to come in with money, and it was kind of just like, no, this will be worth it because I know that if I pass away, my spouse is taken care of. They have a house to live in as if it's paid for free and clear. Never have to worry, you know, just have to pay the taxes, the insurance, the HOA dues. And then, I mean, I always like seeing people, some people take money from the reverse and will go and travel like crazy. The very first reverse mortgage my dad ever did in 1989, the guy did just to buy an RV.
That's awesome.
And he bought an RV and he traveled, and he would send my dad postcards, you know, from all over the United States going, this is the greatest product ever. You know, I can't believe that I don't have to make payments on this. I got my home base back in Arizona, but now I get to see the country.
That's how we define success, is the postcards and thank you notes we get from clients.
Yeah, and I get them. I still get them from people that my dad did these for, you know, 20, 30 years ago.
Dude, that's amazing.
And we get them all the time for the people that I've been helping.
That's the best. What a great company. What a great partner to be working with in the community. We're grateful for you. I know we've got a chance to work on a few different things together now, and it's been awesome. So we love working with
likewise.
America.
Yeah, likewise. It's been great working with you and your clients. Love it.
Feel totally aligned in your mission and how you guys are growing, and to be a part of that. So, dude, I appreciate you coming on. Is there anything that you would leave somebody with? We usually like to ask about like favorite books that made a big impact for you, people that are going through those tougher seasons in their business right now, that are maybe in a growth period, you know, maybe experiencing some growing pains, or they're just, you know, maybe in a retraction and they're going through something difficult. What kind of things would you recommend for them as a business owner?
Yeah, great question. I mean, there's always, I look back in the 20 years that I've been running the mortgage industry, and even in the best of times, there was always, when you're in it, it's always hard, you know? And so I would just say you gotta believe in yourself. You gotta believe in what you're doing. And when you like your personal mission aligns with the mission of the company, like you're going to get through it most of the time. And if you're not going to get through it, it's probably because you needed to be doing something else, you know? And so I would just say kind of just recognize on the daily, like some of the stuff that you're going through, it's going to be all right. You know, always stay optimistic and positive. And I think that's something that has been instilled in me by my dad and by my grandpa.
So awesome. We love talking about that legacy, man. Having that family, you know, thing to carry on is amazing. So Parker, thanks for coming on the show, man. I really appreciate making the time.
Thank you so much for having me.
It's great to work with you, and we're excited to see where this goes.
It's been awesome. Thanks.
All right, brother.